Yes, let's begin the audit report topic revision. So again, here I will not give detailed conceptual explanation. I already gave one revision, goat notes based revision for audit report. Inside that I also showed drafting, how opinions will be drafted in case of different types of opinions, how I took real audit reports and then showed examples, all that, okay, in the revision class itself. Here it's purely about theory oriented, just for recap, remembering purpose, for a quick revision purpose. Okay, so please first watch that revision and then come back and watch this particular chart revision. That will give you an advantage. If you already watched it, fine, not an issue. Now, so audit report, the ultimate objective of the auditor is to give opinion. The opinion is expressed through a report, correct? So here we have given something called comprehensive format of audit report. We have given something called comprehensive format of audit report. You see, whatever I have highlighted in, orange color here, getting it? So they will not be there in the real audit report. I mean, 700 format report. First of all, audit report chapter, no, it is divided into two types, two parts. Okay, we have two parts. Part 1, reporting standards. Part 2, reporting requirements under law. Again, these reporting standards are two types, for unmodified report and modified report. Remember, I'm not using the word opinion, I'm using the word report. Unmodified report, modified report. Yes or no? Unmodified report means very simple. These points will not be there. The audit matter might be there, not an issue. These points will not be there in unmodified report. I'm not talking about opinion. I already told in the EO batch itself, unmodified opinion is different, unmodified report is different, modified opinion is different, modified report is different. Suppose I give unqualified opinion and I am giving emphasis of matter paragraph in that. The report is modified. Opinion is unmodified only, but the report is modified. Unmodified report means if an audit report is given as per 700 format as it is, no additions in that. 705, no additions. 706 edition is not there. If an audit report is given as per 700 format with unqualified opinion, without emphasis of matter, without other matter para, without other information para, then without material uncertainty related to going concern para, just normal audit report we give with unqualified opinion, then that report is called as unmodified opinion. Sorry, unmodified report. Modified report means what? In modified report, my opinion can be unmodified, but I'm including emphasis of matter 706. I'm including some issues as per 705. Then the report gets modified. 700 report we are modifying now. That's why you see 705 standard heading, modifications to the report in independent auditor's report. So when I modify the report, getting it? Not just 705 modifications to the opinion, 706 modifying the report actually. Able to understand? That's it. So even if emphasis of matter paragraph is there, other matter paragraph is there, the report is modified. Opinion is not modified, report is modified. Clear all of you? Now, so these are now right now this is a comprehensive format. Like whatever I've highlighted, no, these might be there, might not be there in every audit report. Depends upon the circumstances, these items which I highlighted might come. But as a standard audit report will have all these contents. Standard audit report will have all these contents. Every audit report by default. If at all audit report is having only whatever I highlighted with yellow, no, only this it has, that's an unmodified report. If at all it is having, if at all you are modifying the opinion, then it's a modified report. Or you are including emphasis, other matter paragraph, all this also, then also it is a modified. Easy? Yeah. Now, audit report will have all this. Now, first one, title. What is the title? Report must be named as Independent Auditor's Report. Addressee to the shareholders or those charged with governance, it decided by terms of the engagement or the law. In case of stat audit, law will decide to whom you have to address. In case of non-stat audit, terms of engagement will decide. And auditor's opinion. Remember, opinion point I told. Opinions are multiple types: unqualified opinion, qualified opinion, adverse opinion, disclaimer of opinion. Yes or no? Generally in a opinion section, what points will be there? Introduction para will be there. Identify the entity. We have audited the financial statements of XYZ Limited. Identification of the entity. And state that financials were audited. We have audited. And states means nothing but it's a statement. Statement that financial statements were audited. And list the title, balance sheet, P&L, cash flow, refers to notes and policies, specifies the financial statement date and period. This is what opinion section will contain. Yes or no? Introduction. This is intro para. Then we actually give opinion. In our opinion, to the best of our information, according to the explanation. Remember that. So these are the contents of the opinion section. In exam straight away they may ask you, what are the contents of the opinion section? What are the points to be included by the auditor in opinion section? Straight question like this can come. Then after opinion, the next para is what? Basis for opinion. In basis for opinion, we generally have one para only. Yes or no? Whenever we are giving a qualified opinion, adverse opinion, disclaimer, then another para might come. So generally one para. What para? We have audited. I mean, we have audited the financial statements as per standards on auditing. As per those standards, we are independent of the company. Yes or no? Our responsibilities and those standards are further described in auditor responsibility section of our report. We are independent of the company. We complied with code of ethics. We believe that the evidence obtained by us is sufficient and appropriate. Like that, so much of matter we write. Now, theoretically, they can ask, what are the points the auditor will include in basis for opinion section? Now, state that these are the statements. State that audit is conducted as per standards. State that refers to auditor responsibility section. State that auditor is independent and he complied. State that auditor obtained sufficient appropriate evidence. State that auditor has obtained sufficient and appropriate audit evidence. These are the statements which you must include in basis for opinion section. And remember, if at all you are modifying, apart from these statements, you should also add another para. First, in the basis for opinion, first it will come. Why you are modifying the opinion? Basis for qualified opinion, basis for adverse opinion, basis for disclaimer. What is the exact reason you should mention? Correct? Next, further, in the audit report, going concern para also might come. This para will come when material uncertainty is there. This going concern para income, MURGC para, we call it as MURGC, material uncertainty related to going concern. MURGC para we call. So material uncertainty related to going concern para will come as per 570. When we are discussing 570, I will cover there. Next, key audit matter para also will come. When? In the following three cases it will come. For listed entities, it is mandatory. Or if there is a requirement in law or regulation. In India, there is no law, there is no regulation where it says key audit matter is mandatory. If auditor feels, then also he can include key audit matter at public interest. That's auditor's choice. Then other information. We do not have in CA Inter 720 standard. At CA final, we have 720 standard. Next, you see, now what are the points that we completed? What are the contents that we completed right now? So we completed title, addressee, opinion, basis for opinion, responsibilities. Remaining I will come to respect to standards, then I will write. Okay, fine. Then apart from that, so responsibilities for financials, nothing but management responsibilities. Management is responsible for financial statements preparation. Management is responsible for internal control. So no, management is responsible for assessment of appropriateness of going concern basis. Yes or no? This section identifies those responsible for oversight of financial reporting. Who are responsible for financial reporting? That also we need to highlight. And then we will get auditor responsibility section. Then we will come to auditor responsibility section. What auditor responsibility section will be there? If you remember, the order in which I am revising here is different from the normal GOAT notes revision marathon. GOAT notes revision marathon conceptual order is different. Where I first discuss title, addressee, then opinion, different types of opinions. Drafting, I will discuss basis for opinion, drafting of basis for opinion in different circumstances. Then I will discuss emphasis of matter, key audit matter, other matter para, 219 and standard. Then I will come to remaining elements of audit report. But this is for learning. Okay, yes or no, at least for getting a clarity. But after you got the clarity, any order you can follow for revision. Now, auditor responsibility section. Auditor responsibility section will have totally three parts. Primary responsibility, additional responsibility, communication responsibilities. Auditor responsibility section is divided broadly into three parts. Primary, additional responsibilities as per standards, and communication. Primary responsibility, we know, reasonable assurance, which is a high level of assurance but not a guarantee. Yes or no? And ultimately issue an audit report with opinion. That is primary responsibility of the auditor. Now, what are the additional responsibilities? Professional judgment and skepticism, identifying and assessing risk of MMS, understanding internal control, evaluating accounting policies, assessing going concern, evaluating presentation structure disclosures in case of fair presentation framework, describing division of responsibility in case of joint audit. Yes or no, group audit. Generally, this description we will give another matter paragraph. We don't give it in audit responsibility section. Then apart from that, auditor responsibility section shall also talk about communication responsibilities. What are the communication responsibilities? Those of you who are watching the chart revision directly and watching this segment, if you are unable to understand, remember that in GOAT notes revision, okay, audit marathon, if you type, some 12 hours revision will be there. Inside that audit report topic, I detailedly explained each and every point. You know, the learning order, conceptual learning order is different from revision learning order. That's it. Now, communication. We need to communicate to top management. What you need to communicate? Scope, timing, findings. We need to communicate regarding independence in case of listed entries. We should also communicate regarding key audit matters in case of listed entries. These are the various communication responsibilities auditor has. All these responsibilities auditor shall describe in auditor responsibility section in the audit report. Auditor responsibility section is also completed. Auditor responsibility section, responsibilities of management, audit responsibilities for audit of financial statements, both the sections are completed. So in audit report, under this what matter should come, under this what matter should come, that only we are discussing now. Okay, next, other information also we completed because it is not there in our syllabus. Okay, next, other reporting responsibilities. This is nothing but report on other legal and regulatory requirements. Report on other legal and regulatory requirements means what? Caro 2020, all that will come. Correct? Then finally, once reporting responsibilities are over, you need to sign. Engagement partner in personal name, he should sign. If a firm is appointed, personal name plus audit firm name shall also be included. Membership number should be indicated, firm registration number shall also be indicated. This is signature of auditor. Then place, city where the city sign, where city where it is, date of the audit report. You can mention the date not earlier than the date on which you obtain evidence. Your audit report should always be on or after you obtain entire evidence. So it cannot be earlier, and not earlier than financial statements approval by respective authority. So audit report date cannot be earlier than the evidence date. It cannot be earlier than the approval date. So it can be on or after that date only. Yes or no? Next, UDIN. All certificates and reports must have a UDIN, right? And sometimes law will give a specific layout. Suppose if at all audit report format is given in law, right now in India there is no law which gives audit report format. If at all there in future, can I talk about SA 700 in that audit report which is given as per the law? You can talk if all the above elements are there in the law format also. Are you getting it? That is what prescribed layout regarding law point, not that required from exam point of view. Easy. So now if you see contents of the audit report once again, report on other legal regulatory requirement, we need to discuss Caro all that, then only we can highlight that. Signature of auditor we understood, place of signature we understood, date of audit report we understood, UDIN also we understood. So predominantly audit report content is discovered. 700 format related content is come. Now we need to discuss different types of opinion. Yes or no? Different types of opinion, and emphasis of matter paragraph, other matter paragraph, key audit matter, material uncertainty related to going concern. Correct? All this if we discuss, audit report topic will be predominantly over. Now, we all know that the opinions are multiple types. Yes or no? Unmodified opinion and modified opinion. Modified opinion is again three types: qualified opinion, adverse opinion, disclaimer of opinion. Now, unmodified opinion if you are expressing, by the way, remember again, modified report is different, unmodified report is different. Unmodified report, you see, reports, audit reports types. SA 700 talks about unmodified report. Unmodified report means what? You will give unmodified opinion and no emphasis of matter paragraph, no other matter paragraph, no material uncertainty related to going concern paragraph, no other information paragraph. All this must not be there and unmodified. Then only that report is called as unmodified. What is a modified report? Sir, I am giving unmodified opinion, sir, but I am also including emphasis of matter paragraph or other matter paragraph or other information paragraph or material uncertainty related to going concern paragraph. If any of this is included or all of this is included along with unmodified, you are not giving unmodified report. Therefore, it's a modified report. Not only that, sir, I'm not giving unmodified, I'm directly giving modified opinion. Also, the report is called as modified report. Now, modified opinion is three types. Directly we'll go to the definitions of modified opinion. Okay. So first of all, auditor will give which opinion? Forms of opinion, two types. Unmodified opinion. What is unmodified? It is issued when financials are prepared in all material respects as per applicable financial reporting framework. When modified opinion is given, two circumstances. Financial statements are materially misstated. How do you know? Evidence is there. Or unable to obtain sufficient appropriate evidence to conclude that financial statements are free from material misstatements. Whenever you are giving unmodified opinion, no, you can use the word present fairly, or you can use the word true and fair view. Both these phrases are treated as equivalent. Clear? Now, modified opinion, we issue in two circumstances, right? We understood. Now, let us understand, let us directly go to 705. Modifications to the independent auditor's report. Modifications to the opinion in independent auditor's report. What is this? 705. Scope and objective. I hope I'm not repeating it. Okay. Circumstances. Just now we saw two circumstances. Financials are not free from MMS, are unable to obtain sufficient appropriate to conclude that they are free from MMS. In these two cases we give. Now we have three types of modified opinion: qualified opinion, disclaimer, adverse. You see, disclaimer is given in only one circumstance. Adverse is also given in only one circumstance, but qualified opinion is given in two circumstances. One, material misstatement is there but not pervasive. Okay. Unable to obtain sufficient and possible effect of undetected MMS or material but not pervasive. Actually here it is MS only, we should use the word. Misstatement is material but not pervasive. The possible effect of undetected misstatement or material but not pervasive. But when we are using shortcut, we use the word MMS. It's okay, not an issue. Okay. Next, now first line, no, if I remove that and keep end pervasive, that's automatically adverse opinion. The second point is there, right? Inside that, not pervasive is there, right? If I just keep end pervasive, automatically it will come disclaimer. Easy or not? Now tell me, disclaimer opinion comes in rare cases where multiple uncertainties are there. Yes or no? Disclaimer is a rare case. Now tell me, sir, modified opinion three types are there, na? Qualified, adverse, disclaimer. Which type of modified opinion? Which type of modified opinion is appropriate? Determining type of modified opinion, it depends on nature of the matter. Why are you modifying? Two reasons. Financials are misstated here. That is one reason. Or I am unable to obtain evidence. That is another reason. Any of these two reasons. Two, pervasiveness of the effect. So first one, nature of the matter. Either financials are misstated, that is the reason I want to modify, or I am unable to get evidence. Because of these two reasons, I decided to modify. Fine, you decided to modify. Which opinion you should give, qualified, adverse? It finally depends upon pervasiveness. So determining, so this itself can be asked as a 4 marks question. What are the factors that determine which type of modified opinion is appropriate? I already told in the class itself. Next, now what is meant by pervasive? Pervasive means what? Pervasive, okay, describes the impact of MMS. Pervasive means it is not confined to specific element, or if confined, okay, it is specific item only. Pervasive is only a specific item only, but it is substantial portion, or it is relating to disclosures which are fundamental. So pervasive is something that is not related to single item, or if it is single item, it is substantial, or it might be related to fundamental disclosures. Easy. Next, sometimes management might impose limitations on the auditor. Generally, whenever management impose a limitation, we request management to remove limitation if at all that limitation is leading to a modified opinion. Management, they refused. You communicate to top management and see, alternatively try to obtain evidence. Suppose you are unable to obtain evidence even through alternatives, and if possible effect is material but not pervasive, I will qualify the opinion. Okay, but if the possible effect is going to be pervasive and I'm not getting evidences, management impose limitations, I will withdraw if permitted by law. If withdrawal is not possible, then disclaimer of opinion. Correct? This is what we discussed. Next, communicate MMS before withdrawal. Before you withdraw, when you decided to withdraw, before you resign, just communicate what are all mistakes you found, because some few days you did audit, you might have found out some mistakes, right? Communicate to the management and then withdraw. This itself can be asked as a 4 marks question. Next, whenever we give a modified opinion, in audit report, modified opinion wordings has to be changed. Remember in that revision also I told how modified opinion, in the EVA batch and revision I showed audit reports, qualified opinion, adverse opinion, how side headings and all will change. So headings of opinion, basis for opinion sections will be reflecting type of opinion. So basis for like qualified opinion, basis for qualified opinion, adverse opinion, basis for adverse opinion, disclaimer of opinion, basis for disclaimer of opinion. Correct? Now again, whenever we are modifying opinion, we should modify basis for opinion section clearly. Generally, no, basis for opinion section will have one para only. What para will be there? We have audited financial statements as per standards on auditing. Our responsibilities under those standards are described in audit responsibility section. We are independent of the company. We comply with the code of ethics. We believe that the evidence obtained is sufficient and appropriate. Like that, we discussed one drafting I showed. Yes or no? In the original revision, in the main revision, if you see, you will understand. That standard para will be there. Suppose if I'm giving qualified opinion, this para will be there, the standard para will be there, and additional para also will come. You know, basis for qualified opinion, why you gave qualified, you should give reason. Basis for adverse opinion, why you gave adverse, you should give reason. Again, if you are giving disclaimer, no, in basis for disclaimer only one para will come again. The standard para will not come there. I told all this. No, basis for that question is asked in Jan 25 exam. Jan 25 also this question has been asked. Okay, if auditor has expressed a disclaimer of opinion, what should be the content of basis for disclaimer of opinions? How basis for opinion para will change? Whenever you are giving disclaimer of opinion, auditor responsibility section also will change. That also will be discussing. Auditor responsibility section in disclaimer. Generally, auditor responsibilities means we talk about primary responsibility, additional responsibility, communication, so much we give. But when you are giving disclaimer of opinion, no. Auditor responsibility section will include only the following statements. Statement that auditor is responsible to conduct audit as per standards and issue report. Statement that due to matters in basis for disclaimer, auditor could not obtain sufficient appropriate evidence, and a statement on independence. And remember, whenever you are giving disclaimer, key audit matter shall never be included. If you are giving disclaimer of opinion, key audit matter communication is prohibited. Here. Now, basis for opinion. Suppose you are modifying opinion because of an MMS in financial statement, that to a specific amount is misstated. How you should modify, describe the mistake, quantify the financial effect. I showed qualified opinion, basis for qualified. Inventory is misstated, the amount of inventory, quantification. State if quantification is not practicable. If at all quantification is not practicable, we should state that it is not practicable. Sometimes misstatement will be in the form of a narrative disclosure. Explain how the disclosure is misstated. Sometimes MMS is by non-disclosure. First I will ask management, discuss with the management, ask them what exactly they omitted. I will ask them to include. If they don't include, if possible, whatever their disclosure omitted in balance sheet P&L notes, I will disclose in audit report if practically possible. Next, sir, I am modifying opinion because I am not getting evidence. Then describe what exactly you did not get. And in case of disclaimer of opinion, basis for opinion shall not include reference to audit responsibility section, statement that evidence is obtained, reference to compliance with ethics, all that. Basis for opinion will have some items, some elements, just standard, that will not be there in basis for disclaimer of opinion section when you are giving disclaimer of opinion. That's it. Any other matter that could have led to modified opinion and whatever its effect shall also be included in basis for modified opinion. That's it. 705 is completed. And remember, whenever a modified opinion is expected, communicate with top management what circumstances lead to modifications and draft audit report, wordings of the modification, communicate to management. 705 is done. Easy or not? All of you? So typically I covered what are the types of opinion, under what circumstance opinions will be given, how basis for opinion paragraph will change in case of modified opinion, how auditor responsibility section will be modified in case of disclaimer of opinion. All that I have covered. See, this is a chart revision. Once again I'm alerting you. So here I am not giving detailed conceptual explanation. This is only a revision. This is a revision which you have to watch after finishing the previous revision, or at least my GOAT notes EVO classes. Yeah. You're able to recollect, because you watched the class. You're able to recollect everything. Next. So with this 705 is also completed. Now let's understand emphasis of matter paragraph, other matter paragraph. Let's understand emphasis of matter paragraph, other matter paragraph. 706. Emphasis. What is emphasis of matter paragraph? It's a paragraph in audit report referring to a matter appropriately presented or disclosed in financial statements, judged as fundamental to the user's understanding. Who will judge this? Auditor. So whatever according to me, whatever matter is fundamental for user's understanding, I will draw that matter in my audit report. Yes or no? Conditions. That matter you can emphasize only when you don't modify on that. And that is not decided as a key audit matter. And how to present it? Emphasis. Present it with a separate section with a heading called emphasis of matter. Clearly express the matter and give reference. State that your opinion is not modified. Emphasis of matter paragraph is not a substitute for modified opinion, not a substitute for disclosure in financials, not a substitute for MURGC para as per 570. Then other matter paragraph. What is other matter paragraph? It refers to matters other than those presented or disclosed in financials, but relevant for users' understanding about audit, auditor's responsibilities, auditor's report. Even for this also I spoke. Branch audit, SBA example, 12, all that big example I gave. Yes or no? Then other matter paragraph has to be used, not prohibited by law and not decided as a key audit matter. Then only other matter paragraph can be used. Presentation, even other matter paragraph shall be given in a separate section in the audit report with a heading called other matter. And remember, whenever you decided to use EOMP, OMP, you shall communicate with those charged with governance regarding the expected wordings of the paras. Yes or no? Then you see, emphasis of matter paragraph is completed, other matter paragraph is completed. Remember, I told in the main marathon detailed example on SBI, joint audit, branch audit, 6,000 branches. Yes or no? Head office, 12 joint audits. That entire comprehensive example I have taken. Next, in the revision also it is there, na? Audit marathon revision also it is there, na? Goat notes marathon revision. In class it is there, of course. In class obviously I'll tell. Next, now other matter paragraph is also completed. Now let us go to key audit matter. Okay, key audit matter. Just 1 minute. Yes, 701. Communicating key audit matter in the independent audit report. What is a key audit matter? Matters which are communicated with those charged with governance which require significant attention of the auditor. Yes or no? Key audit matters are those matters which are communicated to those charged with governance. Key audit matters are those matters which are communicated to those charged with governance in professional judgment of the auditor were of most significant in the audit of current period. No, and these are the matters which are selected from the matters communicated with those charged with governance. And remember, we shall not use a key audit matter if a disclaimer of opinion is issued. And it is mandatory for listed entities, or it is mandatory when there is a requirement in law, or if auditor's choice. If auditor want to include a key audit matter, he can include it. Correct? What is the purpose of key audit matter? Enhances value, transparency, for better understanding, users understanding about important areas in the audit. And key audit matter is not a substitute for financial reporting framework disclosures, not a substitute for modified opinion, not a separate opinion on the individual matter, and not a substitute for MURGC para as per 570. Next, how do you determine key audit matter? Of course, it's a matter of professional judgment of the auditor, but you can select it from high risky areas where significant management judgment is involved, or significant event or transaction is. How to present a key audit matter? Separate section with a title key audit matter. Introduction you should give. State that key audit matters are most significant in current period audit, and state that in the context of audit as a whole, we are not giving any separate opinion. Description for each. Why it was a key audit matter, how the auditor addressed it. How to describe key audit matter I showed. SBI, various examples. What is key audit matter and why it is key audit matter? How we addressed it in our audit. That's a presentation. Next, communication. The auditor must communicate to top management whatever key audit matters you identified. Suppose if you decided there are no key audit matter, mention them that there are no key audit matters. Clear? All of you? Over. 701. Easy. Quick recap. Next. So typically we completed key audit matters also completed, right? Now we need to cover 570. But before that, I will discuss 299. 299, 710 also will cover. Then we'll go to 570. 710 I'll cover at last. Okay. 299 I'll cover. Joint audit. Yes, you see, joint audit. 299, joint audit of financial statements. Joint audit involves 2 or more individuals or firm auditing the financial statements. Yes or no? More in depth about joint audit with different examples I gave in original class and marathon. It aims to pool resources, expertise, all that. Advantages: shared expertise, lower workload, healthy competition. In the recent May 25, advantages and disadvantages. Some question has been asked. Advantages or disadvantages? Something is asked. Disadvantages: fees is shared, psychological issues, coordination challenges, uncertain about the liability for common areas. What is the responsibility of joint auditor? Individual or separate responsibility. When the work is divided, each auditor is responsible only for the work allocated. Allocation can be in the between assets and liabilities, income and expenditure, areas, units, period. You know, in the printed book, no, this also this side heading also came as a point in the printed one. Like this, minor improvements. At overall, it's less than 5 or 6 only. In the following cases, combined responsibility, work is undivided, or collectively decision has been taken, or you know, in statutory requirements, whether financial statements are as per applicable framework or not, collective responsibility for verifying presentation and disclosures, and for ensuring audit report is as per appropriate standard. In all these cases, joint auditors will have a combined responsibility. Correct? Now, audit reporting. Generally, joint auditors will give a single report. But remember, a joint auditor is not bound by majority. He can issue a separate report, cross-referencing each other in other matter paragraph. Next, coordination. Proper coordination is essential between joint auditors. Matters affecting other works, other auditors' works, this auditor has to communicate before the reported date. Each joint auditor can rely upon the other auditor's work. I don't have to verify his work. I can trust him. And if at all, if I find something important for other joint auditor, I must communicate him. That's my responsibility. Coordination. Next, there are some special consideration. All the engagement partners from each audit firm shall be involved in planning. Overall strategy. All the joint auditors shall develop overall audit strategy. All the joint auditors shall develop a joint audit plan covering allocation of resources, common areas, reporting factors, preliminary engagement activities, all that. All the joint auditors must do risk assessment and communicate with each other. All the joint auditors have to document common areas, specific areas, all that. Joint auditors, common letters, common engagement letter, common management representation letter, work allocation must be documented, signed by all, and communicated to those charged with government. 299 is completed. See how quick we are able to finish. Next, we'll go to 570. Go to 570, because 570, this material uncertainty para, that discussion will be there. 570 standard is there in this chapter, completion and review chapter, but we will be discussing as a part of audit report. Okay, 570, going concern. Actually, who has to significance of going concern in financial reporting? What is its importance? If entity is a going concern, assets and liabilities are recorded at normal values. Historical values in case of fixed assets, normal, cost or NRV, whichever is lower, like that. But if entity is not a going concern, financial statements has to be prepared, must and should, on liquidation basis. Inventory shall be written down to NRV. Assets will be recorded at expected values. Sometimes company going concern is not there, but company prepared on historical basis only financials, but they gave a disclosure that going concern is missing. Disclosure is not sufficient. If going concern is not there, just a disclosure in financials is not sufficient. Financial statements has to be prepared on liquidation basis. Suppose if going concern is missing, company going concern is not there, and financials are prepared on historical basis, and they gave a disclaimer that they gave a disclosure that going concern is missing, still financial statements are materially misleading. You will give adverse opinion. Are you getting it? Disclosure is there or not doesn't matter. Suppose if financial statements are prepared on liquidation basis. Suppose if financials are prepared on liquidation. Now financials are true and fair. You can give unmodified opinion and highlight an emphasis of matter paragraph regarding the basis for preparation. Financials are prepared on liquidation basis, right? That you can highlight an emphasis of matter paragraph. Like for this, I will go to GOAT notes once. So I will show you in the GOAT notes how to present going concern. See here, I have given a diagram. This I didn't put in chart notes. Okay. See, what exactly we need to do in going concern. First to know whether company is a going concern or not. Management has to do a preliminary assessment. Yes, they did assessment. They identified events on conditions. Yes, some events are identified. Suppose events are not identified, I will check whether they did proper assessment or not. Okay, and if going concern is appropriate, then I will give unmodified opinion. Suppose no, they identified some events. I will perform further audit procedures. Okay, after performing further audit procedure, I will decide whether material uncertainty exists or not. Suppose no, material uncertainty not existing, though events are there, some loss is there, but that's not a going concern issue. Then See whether financial reporting framework require disclosure. Yes, it requires disclosure. Then did the management disclose it or not? I will check. Yes, they disclose. Then I'll give unmodified opinion. Suppose they didn't disclose. Material uncertainty is not there, but events and conditions are there. Disclosure requirement is there, but they didn't disclose. Since they didn't disclose which is required to be disclosed, I will give modified opinion. Suppose no, applicable framework does not require any disclosure, and they didn't disclose. No requirement, and they didn't disclose. No material uncertainty. I'll directly give unmodified. Suppose no, material uncertainty exists. Now I will now material uncertainty. If I further investigated, I went for further investigation. I found out that going concern is not appropriate. Then, and the fact is not disclosed. It's not just disclosure, not disclosed and accounted. Accounted must be on liquidation basis. Or no, they didn't disclose and they didn't account on liquidation. Directly I will give adverse opinion. Suppose no, they disclosed. Going concern is not appropriate. They disclosed plus accounted on liquidation basis. Then I will give unmodified opinion. On emphasis of matter paragraph, I will highlight the liquidation basis of accounting. This question was asked in CA final in one of the exam. Okay, it was asked in May 25 or May 24 or November 24. In one of the attempt, this was asked, this particular question. It's not there in CA Inter. It's not there in CA material itself. This situation is not given in the material itself, but I highlighted here. I told this in the class also. Suppose going concern material uncertainty exists, but going concern is still appropriate, not an issue. Uncertainty is there, but when I went further, it is appropriate. Management can handle the situation, and they disclosed it very clearly. Uncertainty they disclosed. Right now it is appropriate. Air India situation example. Yes or no? Then I will give unmodified opinion, and I will highlight the same in the material uncertainty paragraph. Suppose no, material uncertainty exists. Going concern is appropriate still, but uncertainty is not disclosed in financials. Then I will give qualified opinion or adverse opinion. Yes or no? This entire going concern. Suppose no, management itself assessment. They are not doing going concern assessment itself. Management not doing. Even I asked them to do. They are not doing at all. Again, I will give modified opinion. They did. I will evaluate the assessment. Now come back to the chart. Okay. So what is whose primary responsibility for assessment of going concern? Management. Management must assess their ability to continue as a going concern. This is required even if financial reporting framework is silent on it. Sir, accounting standard does not say, so I didn't do going concern. You can't say that. Now remember, going concern involves making judgments about uncertain future outcomes. Correct? Going concern is nothing but making judgments about future. Now these judgment is affected by various factors, because you are judging about future, that is affected by various factors. Degree of uncertainty, it increases with future date. Entity specific, size, complexity, nature, these are all various factors that will affect management's judgment about going concern. There are various factors which will affect management's judgment about future. Degree of uncertainty, entity specific factors, timing. Judgments generally, when I take any decision on going concern, that is based on information available right now. This might become invalid later. Yes or no? Later these events will give a different outcome also. These are all various factors that will affect management's judgment about going concern. What is the objective of auditor? Very simple. I have to obtain sufficient appropriate evidence on management's use of going concern. Management prepare financials on going concern basis. I have to get evidence that is it a going concern or not. When I am getting evidence, I will conclude whether any events or conditions exist which may cast a doubt on going concern. I will try to check, and I will report findings as per. This is the objective of the auditor. This objective itself can be asked as a 4 marks question. And remember, factors affecting judgment itself can be asked as a 4 marks question. Clear? That's it. Significance of going concern in financial reporting. This itself can be asked as a 4 marks question. Next. Now, okay. So I understood it is management primary responsibility, all that. What auditor has to do? You do risk assessment. What I will do in risk assessment? Auditor shall consider whether events or conditions during the risk assessment. I will do whether are there any events or conditions that cast significant doubt on going concern. Events or conditions means what? There will be financial events, operating events, other events. In the recent exam, some operating event or some question has been asked. So what are the financial event? Company has a net liability. Borrowings are maturing. Negative operating cash flow, operating losses, inability to pay creditors, non-compliance with loan terms and conditions, we are defaulting. These are all various financial indicators. operating, company itself want to liquidate, loss of key management, labor difficulties, shortage of supplies, new competitors, strong competitors, emergence of highly successful competitors, other non-compliance with regulatory norms, pending legal cases, changes in laws. Remember Paytm example, Paytm payment back example and all I told in class. Yes or no? So these are various events. Now, so auditor, no, in risk assessment, we try to identify whether these kinds of events and conditions exist that may cast a significant doubt on entity's ability to continue as a going concern. Now, so for this, what auditor has to do? First, I will evaluate management's preliminary assessment. If management already performed, I will discuss the assessment. I will see whether any events are there, and I will also evaluate what management is having future plans. Suppose management did not perform, I will ask them why they did not perform and how they used going concern without checking going concern, and inquire about any events and conditions are identified. So we have to be remain alert throughout the audit for identification of events or conditions, nothing but symptom. Now, management performed assessment, no? Evaluate management's assessment. See whether company can continue as a going concern. Remember, it is not your responsibility to do assessment. Yes or no? No need to rectify lack of assessment by management. If management does not do a detailed assessment, you don't have to sit and do detailed assessment. Yes or no? But auditor may conclude on appropriateness of going concern based on whatever information available. Yes or no? Auditor may need to evaluate management process assumptions, and in some cases, no, you may have to do a detailed evaluation. Next, period. Whatever management assessment period is there, for the same period you will also assess going concern. Suppose if minimum 12 months you must assess. If management assesses for less than 12 months from balance sheet date, minimum 12 months they must assess. Now, okay, you assessed going concern from the management. What happened? You found out events. You found out events or conditions. Some symptoms are found. What to do? When events and conditions are identified, get an evidence that whether a material uncertainty exists. If auditor identifies any events or conditions, auditor has to obtain sufficient appropriate evidence regarding material uncertainty whether exists or not. For that, auditor has to perform additional procedures. Additional procedure: request first management assessment, evaluate likelihood and feasibility of management plans for future actions, analyze cash flow forecast like reliability of data, support for assumptions. Jan 25 exam, this question was asked. Okay, in Jan 25 exam, this question was asked. So auditor has to analyze cash flow. What are the points auditor has to analyze in this 3 marks question they asked? Okay, reliability of data, support for assumption. Consider additional information, written representations about the plan's feasibility, all that. Examples: financial analysis, loans and financial terms, legal and regulatory, governance and commitments, all that. These are the various examples of additional procedures which I perform. After performing additional procedures, no, now you will get an idea, material uncertainty there or not. What is material uncertainty? First of all, what do you mean by material uncertainty? Magnitude of potential impact and likelihood of occurrence is such that appropriate disclosure is required. The uncertainty magnitude, that impact is such that disclosure is required, then it is called as a material uncertainty. So evaluate sufficient appropriate evidence and conclude appropriateness of management use of going concern. Suppose if auditor identified material uncertainty, get sufficient appropriate evidence and see whether going concern is appropriate or not. So conclusion: conclude whether material uncertainty exists. Is there any doubt on going concern ability? Now okay, material uncertainty is there. Then auditor has to check whether financials are adequately disclosing. If material uncertainty exists, determine whether financial statements are adequately disclosing and clearly disclosing that there is an uncertainty and its impact. And management has to specifically make a statement that they cannot realize its assets and liabilities in ordinary course. And if no material uncertainty, see whether financial statements are disclosing about events and conditions. If at all there is a disclosure requirement. Finally, reporting. Suppose no, going concern basis is inappropriate. Management prepared financial statements using going concern, not on liquidation. Normally they prepared. So, they prepared normally and they didn't talk anything about going concern. Right away, adverse opinion. Use of going concern is appropriate, but a material uncertainty exists. You know what? The financials also clearly disclosing honestly. I will give unmodified opinion, and I will also put a separate side heading, material uncertainty related to going concern. Like that, I'll put a separate side heading and draw attention to that point, stating that material uncertainty is there and auditor's opinion is not modified here. Air in the audit report I showed. Next, inadequate disclosures. Suppose no material uncertainty is there, but going concern is appropriate. But uncertainty is there. But that uncertainty they didn't disclose in financials. Misleading. Either qualified or adverse depending upon the situation, and basis for qualified or basis for adverse opinion shall state the impact. That 570 standard is over. Clear all of you? Now again going back to audit report. So typically 570 is over. Now we are left with what are all? 710 and Caro mainly. Two other important areas that we are left with, 710 and Caro. In 700 some introduction discussion is there. That's it. If that also we quickly revise from the chart, it is done. And remember, once again I'm telling for the online viewers, this is a chart notes quick revision only. Don't expect too much of explanation in this. Here I'm only revising. So if you want explanation in the revision itself, I have 12 hours marathon which is already uploaded, 80% already. So for example, I'll just show you audit marathon. If you see, so the first one, you see the green one, this one, so 11.5 hours is there. So that one you need to watch. In this, with examples and all I discussed little conceptually. Okay, all the dots will be connected. After watching that only you should watch this. Okay, we'll continue in the next session the remaining topics. Yes, let's continue the discussion on audit report topic. So we are still left with one more standard in this particular topic, 710. Comparative information. The standard heading is actually comparative information, and there are two things which are involved in comparative information. One is corresponding figures, another one comparative financial statements. There are two things involved in comparative: corresponding figures and comparative financial statements. See, typically the standard is only dealing with comparative information. These are approaches, and we have already discussed in our previous main detailed revision. Corresponding figures means in this approach the auditor will give opinion only on the current period figures. He will not give opinion on the previous year prior period figures. Whereas in comparative financial statements, the auditor's opinion covers all the periods mentioned in the financial statements. And you know what? In Jan 25 exam, comparative financial statements question was asked, but the question was framed negatively, wrongly. The question was wrongly framed. The answer they gave is this one. Compared corresponding figures answer only they gave. Because no, comparative financial statements is not really there. It's a special purpose framework. Technically speaking, there is no framework in India or anywhere in the world where auditor has to give opinion on all the periods referred in the financial statements. It is generally happening in special purpose engagement, in special purpose audits only. So comparative financial statements is not really practical. Anyhow, we'll be solving question bank there. I will show you. Okay, now, so corresponding figures is what mainly predominantly important in exam point of view. So first of all, what is a comparative information? These are the amounts and disclosures of prior period. Amounts and disclosures of one or more prior period included in financial statements of the current period. Now, what is the nature of comparative? Comparative information nature is decided by framework. There are two frameworks: corresponding figures, comparative financial statements. In corresponding figures, opinion refers only to current period. In comparative financial statements, opinion refers to each period. Yes or no? Which approach we have to follow? Generally decided by law. In India, the law says corresponding figures approach. The auditor has to give opinion on the current period only. Therefore, the approach is corresponding figures. Next. Now, audit reporting. Now, important. Like, what is the reporting requirement from auditor's point of view in case of corresponding figures approach? Generally, the prior period figures, no. What is first of all corresponding figure means? Corresponding figure means where prior period figures are presented, which has to be read only along with current period. What detailed prior period figures are presented, how detailed, it is decided by current year figures. Now, auditor's opinion does not refer to corresponding figures normally. Normally in our audit report, we don't talk anything about corresponding figures, but there are 4 circumstances, 4 exceptions where we talk about corresponding figures. Exceptions. What are the exceptions? Suppose no, prior period financial statements were audited by a different auditor, not our audit firm, a different audit firm audited. Then we include in other matter paragraph statement that predecessor auditor audited, opinion he gave, and auditor's report to date. Getting it? If at all prior period financial statements were audited by another auditor, that fact has to be mentioned in audit report in the current period in other matter paragraph. See, generally prior period related information we don't have to talk. But if prior period is audited by another auditor, we refer. Second one, prior period is not at all audited. We state that in other matter paragraph that prior period financial statements were not audited. However, remember, just because you're making this statement, doesn't reduce fight and responsibility. You still have responsibility to obtain evidence for opening balances. And third scenario, material mistake is there in prior period. Suppose if there is a material misstatement is there in prior period and it is still uncorrected in the current period, the same mistake carry forwarded. And if you think it is material and pervasive, accordingly give a qualified or adverse. Suppose in current period it is corrected, it is corrected, then no need to worry. Next, suppose there is a prior period, auditor itself gave a modified opinion. Like prior period mistake is there or something is there, auditor gave a modified opinion, and the reason whatever the reason that is unresolved. What reason the auditor gave modified opinion is still unresolved, then current year also you have to modify the opinion depending upon the severity of the matter. And in the basis for modification, refer both to current and corresponding figures. Getting it? Otherwise, explain impact on comparability. See, if at all it is material in current period, we modify the current period opinion, and in the basis for modification, we tell that prior period unresolved matter is there, all that. Suppose in current period it is not material. In current year there is no impact. Even then we will give modified opinion because comparability is affected. Last year one is a materially misstated. This year one is of course free from MMS. It has a MMS. It has a misstatement but not material. So technically current year there is no modification required, but comparability is affected. For that reason we need to give a modified opinion. That's it. So generally the current period audit report need not talk about prior period figures, all that, but there are 4 exceptions and these are the exceptions. Clear? And for more clarity, just read from the main quote notes. That's it. Then generally, what is the audit procedure for comparative information? Remember, many students in the standard they confuse. Comparative information is the main standard heading. Corresponding figures is one approach. Comparative financial statements is another approach. Technically, all are comparative information only. Audit procedure for comparative information is the right question. There is no audit procedure for corresponding figure, no audit procedure for comparative financial. Audit procedure is same because it's a comparative information. Now, what is the audit procedure? Ensure that prior period amounts and disclosures are included and properly classified, and they are matching with prior period balance sheet. 2. Verify accounting policies consistent or not. Same policies followed in the current period or not. Perform additional procedures if any material misstatements are identified in comparative information. If prior period financials are audited by same auditor and if there is a mistake, first try to resolve prior period financial statements directly by 560 procedure and get a written representation for all the periods which are mentioned in the financial statements. Clear? That's it. And specific prior P&L items. Specific prior P&L means nothing but you need to get a specific written representation for prior period items. Especially for prior period items, the auditor has to get a specific written representation. A general representation you get whether all the comparative information is correctly classified, presented, all that. For prior period items, you will ask a special representation that all the prior period items were identified and rectified, adjusted accordingly. That's it. This is 710 standard over. Easy. So more in depth I have given. No, I think in the main marathon I have not given any discussion. I think so. 710 I have not covered in the main marathon. I'm not sure. No, covered. Yes, I covered. That's it. So with this, all the reporting standards were completed. In audit report chapter, if you see, all the reporting standards were completed. Hardly it took 45 minutes. All the standards, 700, 701, 705, 706, 299, 570, 710. No. 700, 701, 705, 706, 710, 5. 299, 570. 7 standards we covered within just 45 minutes. Okay, next. Then, audit of branch office accounts. Now let's begin audit of branch office accounts. Who should do audit of branch accounts? See, first of all, a company need not maintain separate books for branch. Centralized they will maintain. Today almost all the companies maintain centralized. There is no compulsion for maintaining branch accounts. If at all a company is maintaining separate branch accounts, then and that branch also can be audited by same auditor. You need not have a separate auditor for that. The entire head office and branch is all put together. Single person can audit. There is no compulsion that branch has to be audited separately by another auditor. But if a company branch has to be audited by a separate auditor, then they can appoint a branch auditor. That is when the concept of branch audit comes into picture. Clear? Who can do branch audit? Main company auditor himself can do, or another chartered accountant can do. Yes or no? Who will also be appointed in the same manner. 139. Foreign branches, company auditor can do, or a chartered accountant can be appointed, or local qualified person in that country, we can appoint him also, not an issue. So branch auditor, no, he will report to company auditor. Fraud reporting, everything will also apply to branch auditor. Caro reporting, everything will be applicable to branch auditor. Understood, everyone? Now, whenever there is a concept of branch audit, there is a standard 600 which is applicable. In-depth standard of entire 600 is there in CA final. In CA inter, we only have few procedures. Principal auditor's procedure, only this discussion is there in CA inter. Okay. What principal auditor? Suppose the moment you get to know that there is a branch auditor, first you have to inform branch auditor how his work is going to be used and make coordination at the planning stage itself. At the beginning of the audit itself, communicate him how his report is going to be used, by when he should complete his audit. Communicate special considerations, reporting, timetable. Tell him what are the special areas he should focus on in this company. Tell him, his report is considered. Also tell him by what time he should complete the audit. And review his procedures, other auditors procedures and findings. He has done some audit procedures, right? He has found some important issues, right? If you want, you can review that. Getting it? Provided he is ready to show working capital, working papers. Next, perform additional procedures if necessary based on engagement or competency. Any other additional procedures, all that. And if you want, you can visit also the particular branch and directly communicate with him. These are principal auditor's procedure. Who is a principal auditor? He is an auditor who is reporting on entity financial information. Entity financial information includes what? Components information which is audited by others. Who is other auditor? He is a component auditor who audits component financial information, where that information is included in financial statements audited by principal auditor. What is a component? From normal division and branch standalone financial statements point of view, subsidiary, associate and joint venture consolidated financial statements point of view, they're called as components. See, more in depth about this I already told in other matter paragraph explanation, where I took SBA example, all that. Yes or no? Next. So that's it. Using another auditor's work, obviously principal auditor can rely upon other auditor's work. You can absolutely trust his work. If at all something goes wrong in his work, he is only responsible. You don't have to be, because there is a division of responsibility in joint audit and branch audit. Division of responsibility will be there. Clear understanding of roles, like when you're working, when you're using other auditors work, you should clearly understand what is your role, what is his role, all that. That's it. Okay, in this mostly this is what this third point is only important from exam point of view. So with this, all the reporting standards and this basic content is all covered. Now we need to discuss about reporting requirements under Companies Act. We need to discuss about reporting requirements under Companies Act. Like you see, this standard at the beginning I told is divided into two parts. Part 1 reporting standards, part 2 reporting requirements. This is reporting requirements. Now we are going to discuss. So what are the reporting requirements? What are the reporting requirements? Part 1, 143 section talks about reporting requirements. In this we have these sections: subsection 11, subsection 3, subsection 1. There are 6 inquiries, and 143 subsection 3, 16 matters. Caro, 21 matters. Getting it? On all these 3 you have to give a report. 6 matters, only if it is negative you have to comment, whereas remaining 16 positive or negative, both you need to comment. Caro, positive or negative, both the opinions you need to give. Whatever it is, you have to comment. Getting it? Totally, approximately we have 21 plus 16, 37, 43 matters we need to comment on. Totally 43 matters we need to comment on. Where this reporting requirements will come in audit report, if you go to SA 700 comprehensive format I gave, inside that one item is the report on legal and regulatory requirement. Under that heading in the audit report you should give. Technically, audit report will have part 1 and part 2. Report I'm talking. Audit report will have part 1 and part 2. First one, part 1, report on financial statements. This is report on legal and regulatory requirement. This is also called as other reporting requirements. Under this section, Caro, everything will come. Clear? And I already showed this in the audit report topic also. Now, so there is a section called 143 subsection 2. That is only the section which says that auditor has to give an audit report. This section only says that auditor has to report whether financial statements are giving true and fair view of state of affairs, P&L, cash flow, all that. Auditor has to report to the members. The law itself says to the members you need to report. Getting it? Then there are various matters. 143 subsection 1, reporting requirements, enquiries. Auditor has to inquire into the following items. 6 items were there. Loans and advances. Okay, whether they are properly secured, terms are not prejudicial or not, you need to check. Are they prejudicial or not prejudicial? Check out 2 points. Book entries, depreciation, provision for bad and doubtful debts, reserves, prepaid expenses, outstanding expenses. These are all book adjustments. Whether these book entries are prejudicial. Prejudicial means favorable or unfavorable, reasonable or unreasonable. Simple. Prejudicial means unreasonable. Not prejudicial, are they fine? That's what. See, this question, one student asked, sir, not prejudicial is there? In some books, prejudicial is there? Terms are prejudicial is there or not? It can be expressed in any way. Is it good or bad? Is it good? Check out. Or is it bad? Check out. Both are same. Yes or no? Next, shares. Suppose if a company is selling shares and securities at less than purchase price, means loss. They purchased at some price and sold at another price. Forget about market value. At market value is how much and what is the selling price? It doesn't matter for you. Less than purchase price, a company is selling the shares and securities. Then observe that. Remember, this point is not applicable for banking companies and investment companies. Then loans and advances. Company gave loans, but they shown as deposits. Check whether they were classified as deposits. See whether personal expenses were charged to revenue. Nothing but P&L account. Personal expenses of whom? Directors, all that. Shares. Verify, shares for cash. If a company has allotted shares for monetary consideration, shares allotted for cash, verify whether cash is received. If not, see the position stated in the balance sheet correct or not. Suppose for positive response, ignore it. For all negative response, you must give a negative answer with explanation. What is the reason? All that. Simple. 6 matters we have completed. Yes or no? 6 inquiries. Then additional reporting requirement 143 subsection 3. Here this we call it as checklist item. We also call it as checklist item. We also call it as affirmations by auditor. So what auditor has to? Very simple. Whether information and explanation, whatever auditor want, did he ask, sought and obtained? If any information you did not get, what information you did not get and what is the effect of it? Then whether proper books of accounts maintained or not, check out. Branch related returns received or not, check out. Yes or no? See, branch audit report. Have you considered it? Have you considered branch audit? Suppose if a company has a separate branch auditor, branch audit report is there. Is it given to you? Have you considered that in overall audit report? That you need to check. Whether balance sheet and P&L agree with books of accounts. Whether financial statements comply with accounting standards. Do you have any adverse observation? Any comments on the functioning of the company? Are there any transactions? Are there any activities which have adverse effect on the functioning of the company? Check out. And is there any director who is disqualified? And any other matters related to accounting records. Do you have any objection on the accounting records? In our class also I told you this is a repetition point. Yes or no? Are proper books of accounts maintained? Do you have any objection on accounts? Both are same. I told already in the class. Yes or no? Then you need to give a report on IFC. You need to talk about whether internal financial controls are adequate and are they operating effectively. And remember, IFC does not apply to one-person company, small company, private company with a turnover and borrowings. Turnover less than 50 crore, borrowings. So if at all I'm doing an audit of private limited company whose turnover is less than 50 crore, whose borrowings are less than 25 crore, I don't have to report on this I point. Actually ABCD I. Okay, IFC point will not apply to that private limited company. I don't have to comment upon it. For all other companies, IFC point I will comment. Yes or no? And any other matter. Rule number 11 identifies with different varieties of matter. Did the financial statement disclose impact of pending litigation? Did the financial statements recognize all the provisions for foreseeable losses, long-term contracts, derivative contracts? Is there any delay in transferring amounts to IEPF? Actually, these are main points, ma. Okay, then auditor has to verify funding party, intermediary, all that. You need to get a representation on specific funding or intermediary transactions, yes or no, and any assurance on that. So regarding this, more in-depth explanation I gave in the main marathon. Like there will be funding party, they'll be giving funds to some intermediary, the intermediary will be giving funds to ultimate beneficiary. So, and most of these transactions will be disclosed in the financial statements itself. Apart from that, are there any transactions? Director said no, get a representation. So this point is asking, get a representation that apart from whatever is disclosed in financial statements, no other transactions were lended or sent or received. Able to understand? And moreover, in schedule 3, under additional regulatory information, wherever your company acted as a funding party or intermediary, or wherever your company acted as a funding party or intermediary, the details has to be shown. Clear? Next, whether the dividends declared by the company, are they in compliance with section 123 of the provisions or not, and whether the company is using audit trail feature or not. It is mandatory, yes or no? And the feature must not be tampered, it must be preserved for statutory requirement. And see here, reporting must be either positive or negative. If it is positive, report positive. If it is negative, report negative. If at all any point is not applicable, ignore. Wherever you are giving negative, give reasons also. That's it. 143 subsection 3 is completed. Then we have another reporting requirement, 143 subsection 12, fraud. If auditor identifies fraud more than or equal to 1 crore, you have to report to central government within 60 days. ADT 4. Suppose if the fraud is less than 1 crore, you need to report to board of directors. Yes or no? Or audit committee, as the case may be. If audit committee is there, you will report them. If audit committee is not there, to board of directors, you will report them. Yes or no? That's it. Next. And remember, the fraud matters you should also report simultaneously in Caro. Getting it? Caro means what? We'll discuss. Caro is one more reporting requirement as per 143 subsection 11. 143 subsection 11 gave power to central government. Okay, where central government can notify any matters on which auditors will report on. Accordingly, central government has notified Caro 2020. Okay, so what is this Caro 2020? It has 21 clauses. Each clause is dealing with different reporting requirements. Clear? Just 2 minutes. Yeah. We'll continue discussion on Caro 2020. We totally have 21 clauses, right? Clause number 1, fixed asset. Fixed assets, it is talking about 5 types of issues. First one, whether fixed asset register maintained or not. Whether the company is maintaining register containing proper details, all particulars, location of fixed assets, everything. Then physical verification aspect, whether physical verification is done at proper intervals, reasonable intervals. Actually, the standard uses the word reasonable intervals. If not, and if any discrepancies were found on physical verification by the management, whether they were rectified in the books of accounts or not. Third issue, title deeds issue. That too with regard to immovable property. Title deeds of immovable property. Whether title deeds are in the name of the company or not. Next. Sometimes companies will go for revaluation of PP intangibles. Whether are they done by registered valuer checkout. Suppose if there is a change if the change after and before revaluation, the change is more than or equal to 10% in net carrying value of each class of asset. Yes or no? Specify amount of change if change is more than or equal to 10% of net carrying value of each class of property, plant and equipment and intangibles. And binary transaction, whether any proceedings initiated, are they appropriately disclosed in the financial statements or not. Next, inventories. So 5 issues. By the way, remember, anything can be asked as a question. Okay. Yeah. Next, inventories. There are 2 issues. Physical verification, whether the inventory verification is done at proper intervals, check out. If there is any discrepancy more than 10% in aggregate of each class of inventory, each class of inventory means what, by the way? Raw material, work in progress, finished goods. Yes or no? So the auditor has to, whether they were properly dealt in books of accounts or not, check out. Working capital loans, whether working capital loan sanctioned in excess of 5 crores. Remember, sanctioned loan only they are asking. They are not asking about outstanding loan, drawing power. No, sanctioned loan. Sanctioned limit. And remember, when you are taking working capital loan, funded loans, non-funded loans, both you have to take. Funded means those where you withdraw, where you can withdraw. Guarantee is a non-funded. Yes or no? Guarantee is also to be considered. Any temporary guarantee, letter of credit. For example, letter of credit is that's a working capital guarantee. It's a working capital related guarantee. Suppose I want to import goods from outside India, so bank will give a guarantee, letter of credit to the other importer. So he will send the goods to me. Exporter, he will send the goods to me. I am the importer. Exporter want to send the goods to me. So he is doubtful whether I will make a payment or not. So banker gave a LOC. That LOC amount is also to be considered in working capital limit. Able to understand? Like this, a practical question came in CA final recently. Next. And so if at all more than 5 crore worth of working capital limit is sanctioned, then what auditor has to verify? Whether quarterly statements, returns which are filed with the banks, are they matching with books of account? For most of the banks, now they are matching. Earlier, when this provision for the first time came, many banks did not, many companies did not have matching numbers. What they file with bankers is different from what they show in the books of accounts. And remember, These 3 points, title deeds point, revaluation points, Binami transaction points, these are also to be disclosed in Schedule 3 under regulatory information. In Schedule 3, company has to disclose these 3. And of course, auditor also has to report on these 3. In this also, the second point is there, right? Every company has to disclose on this in their financial statements, notes to accounts under regulatory information. On the same, auditor has to comment in Caro. Clear? Next. Loans, advances, investments and guarantees. What is this? Whether company has provided loans or advances in or loans or advances in the nature of loans. Okay. So secured, unsecured, doesn't matter. Getting it to any other entity. If so, breakup between related parties and others. Actually, the standard, the Caro does not use the word related party. They actually use the word subsidiary, joint venture, associate. Okay, that's what they use the word, exactly speaking, subsidiary, associate or joint venture. Subsidiary, associate, joint ventures, we simply call them as related parties. So for the sake of convenience, we use the word related party. Next, okay. So the audit, whether the company has given loans and advances to them, you show breakup. How much amount is given? How much amount is given? How much is outstanding at the end? Next, see the terms and conditions are not prejudicial to the company's interest. See that they are favorable or unfavorable to the company. See that receipts are regular. Like you gave the loan rate, company gave a loan rate. Are they recovering regularly? Check out. If any amount is overdue for more than 90 days, whether the company has taken reasonable steps to recover them or not, check out. Next, sometimes the companies will give renewals or extensions for the same loans. Like they gave loans, right? They are not paying. So for that, company would have given some renewal or extension or fresh loan is given. If at all any fresh loans or renewals is given, how much aggregate amount is renewed, how much amount is renewed, how much amount is extended, how much amount is given as a fresh loan so that old loan will be settled, yes or no? And what is their percentage to the total loans? What is their percentage to the total loans? That also you should give. Specify and demand. Sometimes companies will give demand loans also. Demand means repayment or demand, or there is no repayment period. If at all any such loans is there to promoters and related parties, specify total amount of loan and what is its percentage. In both the cases, percentage also has to be mentioned. What is this? What is its percentage? What is percentage of renewed loans, extended loans as a percentage of total loans given during that year? Second one, what is the percentage of demand loans with the total loans given during that year? Percentage also you should mention. Clear? That's it. Next, clause number 4, not a big deal. Okay, so same, it's actually clause number 3 extension, technically speaking. So the company will give loans, guarantees, advances, security, all that, right? Whether 185, 186 provisions of the Companies Act satisfied or not. If not, provide details thereof. Next, deposits. Verify compliance with Companies Act, RBI directives, company law board and tribunals. So whether if the company has given if the company has accepted any deposits, verify compliance with them. And here one more point is there, I guess so. Whether interest and deposits, I think repayment is proper or not. Just check out once whether repayment point is there once in deposit. Just open the GoToNotes. Notes. Sorry, that is not there. Okay, just compliance. You just have to check the compliance with the Companies Act. Whether if the company has accepted public deposits, you just have to check compliance with laws and regulations. That's it, nothing else. Next, cost records. Whether maintaining cost records as per 148(1), company, whether company has maintained cost records as prescribed under 148. Check out whether such accounts and records are maintained or not. You need to check. Statutory dues, they're divided into 2 types: undisputed, disputed. I already told in-depth meaning in main marathon. Okay, disputed due, auditor simply has to disclose information. What information? How much is disputed, where it is disputed, where the amount is pending, in which forum the dispute is pending. Undisputed, 2 questions you need to answer: whether the company regularly depositing it every month, periodically, quarterly, monthly, whatever, periodically are they depositing regularly? If not, any outstanding arrears which are more than 6 months on balance sheet date, company has to report. Next, undisclosed income. Transactions not recorded in books of accounts, are they discovered during the year? Is there any income which is discovered in the current year? If so, is the same recorded in books of accounts? Here recording is what the key point. What they're asking, did any income disclosed by the income tax, did any income discovered by the income tax department in current period? Yes. Whether the same, the discovered income, because previously it was not recorded, now it is discovered, is it recorded in the books of accounts? This is the question. You're getting it? Next, defaults in repayment of loans. Lender wise you need to mention defaults, like if there is any default in repayment of loans to any lenders, lender wise what is the nature of the loan, who is the lender, how much amount is defaulted, principal or interest or number of days, all that. Especially this breakup is required when the lender is a bank or financial institution. Debenture loans and all you don't have to. Government, bank, financial or government also. In all these three cases breakup has to be given. Next, is the company declared as a willful defaulter by any lender? Is the company declared as a willful defaulter by any lender? In just 2 days back, Anil Ambani was treated as fraud in one of the particular company. Getting it? I don't know whether that company is also categorized as willful defaulter. I'm not sure. So whether the company has been treated as willful defaulter by any lender, in civil report you can find this. Okay. Next, diversion. If loans are not applied for the purpose for which it were obtained, mention amount of loan diverted. If the company borrowed some loans for some project purpose, they diverted it for some other purpose, nothing but used it for some other purpose, mention that. If short-term loans were used for long-term purpose, how much amount is used, like that, mention. And sometimes company will take loans for subsidiaries, joint ventures, associates needs. How much amount is taken for the purpose of subsidiaries, associate, joint ventures. Sometimes company will pledge, the company has shares in another company. Those shares company will pledge with the bank and then they will get a loan. Now the shares which the company pledged, they are shares of the subsidiary, associates and joint ventures. So whether loan against pledge of shares of subsidiary companies, associate companies, that you need to mention. Okay. If so, report details thereof. Also report if defaulted in them. Is there any default or not? Just check out. Next, 10th one, end use of funds. Sometimes we raise money from IPO or FPO. Whether money raised from IPO or FPO, are they utilized for the same purpose? If not, is there any default, like utilized for some other purpose? Delay, not yet utilized. Subsequently we rectified. We temporarily used it for some other purpose and rectified it. So all that has to be mentioned. Next, if preferential allotment or private placement happened, check Companies Act provision. Further, whether the amount raised in preferential placement, all that, right, private placement, preferential allotment, for what purpose it is, right, for what purpose it is utilized, check out that. Then fraud reporting, whether fraud on the company or by the company. So for company, fraud can happen on the company or company management would have done fraud on third parties. Whatever it is it noticed or reported during the year? If so, what is the fraud, how much amount involved, who are the parties involved, mention that. Whether report under 143.12 has been filed with central government. Suppose if auditor identified any fraud for more than or equal to 1 crore, he will file form in ADT 4 with central government. See whether that is filed or not. If so, mention it here. Whether auditor considered whistleblower complaints. Every company will be receiving whistleblower complaints every year. Yes or no? So the auditor has to consider whistleblower complaints as a part of risk assessment process, so that he will know where to focus more, all that. So did auditor consider or not? Check out. Auditor has to report, yeah, I considered. Suppose I'm the auditor, I'm giving this report, so I will say that I considered. Next, Nidhi company. This point is exclusively applicable for Nidhi company. Whether Nidhi company has complied with net owned funds to deposits ratio of 1:20. Whether the Nidhi company maintained 10% unencumbered term deposits. Whether the Nidhi company defaulted in repayment of interest deposits, all that. Check out. Then related party. If the company has entered with any transactions with related party, check compliance with 177, 188 and see that related party information is disclosed in the financial statements as per accounting standard. Here 2 points are there. Yes or no? 1, compliance with Companies Act provision. 2, disclosures as per accounting standard. That's it. Next, internal audit system. Whether company has internal audit system, actually it's not ICS, it's actually internal audit only. Internal audit system commensurate with the size and nature of the business, and whether internal auditor's report is considered by stat auditor. So I should also tell, yeah, I considered his report. Next, whether company entered into any non-cash transactions with directors. If so, 192 provisions have been complied or not, check out. Next, NBFC, whether registration is to be obtained or not. Is the company, suppose I'm doing audit of every company, whatever company I'm doing audit, this point I need to check, is the company liable for registration? NBFC, NBFC registration is compulsory if principal business criteria is satisfied. What is principal business criteria? I already covered in the main marathon. Yes or no? This is just a quick revision. Principal business means very simple. If the NBFC more than 50% is from financial income and more than 50% of the assets are financial assets, then that particular organization is nothing but financial activities they're doing. They must register with RBI. Whether company has conducted any activity without a registration, Yes or no? Just check out. Is it liable for registration, and are they doing any activity without registration? Check out. And core investment, whether the company is a core investment company. If so, is it fulfilling the criteria? If the company is exempted core investment company or not registered, is it still fulfilling the criteria? Check out. And if the group has more than one core investment company, mention how many core investment companies are there in the group of companies. Next, whether any cash losses are incurred in the current financial year as well as immediately previous year. If so, how much amount is there in each year? Just mention that. Next, is there any auditor resigned from the audit? Yes or no? Is there any resignation of statutory during the year? If so, is the incoming auditor has taken into consideration previous auditors issues, objections, all that? Check out. Next, based on various informations and your knowledge, if he is of the opinion that no material uncertainty exists at the balance sheet date. Actually, no material uncertainty exists at balance sheet date on date of audit report. You need to mention, you need to verify this point on which date? On date of audit report you should verify this point about the financial position of the company on balance sheet date. The financial position of the company is on balance sheet date. Whether the financial position of the company on balance sheet date, whatever assets and liabilities are there, whatever liabilities are there, whenever the company is liable to pay, can the company pay? Check that procedure, check that status on the date of audit report. I want latest information. Yes or no? On the date of audit report, you need to check this. Clear? This you need to add it. Okay, in the chart book, printed book, you need to add this point. Next, CSR compliance. In CSR, no, like CSR expenditure, we divide the money into project expense, other than project expense. If at all it is other than project, no, it has to be transferred to special fund, schedule 7 fund within 6 months from the end of the relevant financial year. Now, suppose if it is project expense related one, no, that amount has to be transferred to a special bank account given under 135. Next, finally, clause number 21, that is applicable only for consolidated financial statements. It is not applicable for standalone financial statements. It is applicable for audit report on CFS. Whether there is a qualification, adverse remarks, all that. If though, details of the companies, all that. Very simple. You know, what are all the companies that are included in consolidated financial statements? Identify. In those companies, in their Caro reports, their auditors would have given some adverse remarks, qualifications, right? All those qualifications at one place you should give. That's it. Now, by the way, this Caro is applicable to what companies? I think here we have not mentioned applicability of Caro because it's not a big deal. Anyhow, I will tell my team to add this. Okay, in the next edition. Fine. Caro applicability, only that point got missed, I think. Rest everything is included. Applicability of Caro. What is applicability of Caro? It is applicable for all companies except banks, insurance companies, section 8 companies, banks, insurance companies, section 8 companies, and already 1%, yeah, 1% company, small company, private limited company subject to 4 conditions. Private limited company subject to 4 conditions. Paid up capital and reserves and surplus shall be less than or equal to 1 crore on balance sheet date. Turnover of the company shall not exceed 10 crore. Borrowings of the company from banks and FIs at any time during the year shall be always less than or equal to 1 crore, and it should not be a subsidiary or holding of a public limited company. But remember, by today this private company logic is irrelevant. I told you, because most of the private companies, if at all a private company is satisfying definition of small company where paid up capital is less than 4 crore and borrowings is less than 40 crore, or turnover is less than 40 crore. If at all a company becomes a small company, automatically private limited company point you don't have to check. It's a small company, Caro is exempted. And even in the regular class, in our actual class, I showed Caro guidance note. This particular point, I clearly told if a particular company is coming under small company purview, automatically private company point will be irrelevant. And some students ask me, sir, in small company borrowings criteria is not there. Borrowings criteria is not there for small company definition. What if borrowings is more than 1 crore? Still doesn't matter. If a company is a small company, that's it. When a company becomes a small company, capital less than 4 crore. Turnover less than 40 crore. That's it. Borrowings doesn't matter how much ever you have. It doesn't matter. You are a small company. That's it. Caro is exempted. Clear? That's it. With this, entire audit report is completed. Totally, we spent approximately 1 hour 15 minutes on the entire all 7 standards, Caro, everything put together. Yes or no? So in the Caro, in this current edition, what got missed exactly? Actually, till now, whatever we have seen, there's nothing. Even a single point also not missed. So no, here only, I think. Not even revaluation, not this. I think only at one place it got loans and advances. The percentage point also has to be added because we want to make sure the chart is 100% clear. So this percentage point we have to add. Then what else we need to add? Then what else we need to add? Here the word subsidiary company has to be added. Then is there any other important wordings that is missing? Yes, here audit report date has to be added. That's it. Only three issues. Yes or no? Just to make it even more clear. That's it. With this, audit report is completed. Confident?